All right, FXN Trading Group. Welcome, guys. Per your request, we're going to be making some videos about. Um, we're going to be going over the pound pairs and also the euro pairs. Euro pairs will be in a different video. This video is going to be specifically the pound pairs. And so we're going to go ahead and take a look at the pound pairs, what they did last week. And let's take a look and see how many setups we can find that we could have potentially taken following the rules of that we know what we're looking for. Okay, so let's just go ahead and jump right in and get started. All right, guys. So let's go ahead and get started with pound USD, and this is going to be here last Sunday. So last Sunday going into Monday. Okay, so you know that essentially what we're looking for is a pattern to form outside of the Asian box or right after the Asian box, right? Either a type 1, type 2, type 3 setup. And we're only trading those type of setups. If we don't see the setup, we don't trade it, right? So that's number one. Number two is we all know that, essentially London sets up the trend, and then New York session, we typically very likely we get a reversal, right? Is typically how it happens, right? So if we don't find a pattern during London, then essentially you'd be looking for some type of reversal to happen during the New York session. Okay. So those are the things that we're going to essentially look for and see if we can find here. And the more that you go through this, um, the more it's going to help your eyes catch the M's, W's, the morning stars, evening stars, the railroad tracks, and things of that nature. So you can actually get more familiar with them. And then more importantly, you'll be able to trade them because your eyes will be seeing them more and more and more. Okay. It's just like when you go buy a car, let's say you buy a Toyota, Camry, whatever, and after about a week or two you start to notice that like everybody drives a Toyota Camry. You start seeing them all over the place. Same kind of concept here is like the more that you see it, the more and more you start to literally see it on your own. So this is why it's important for you to take the time and go back into the charts and literally just go back and week after week after week and start doing this so you can identify what the potential trades are, and that way you'll get that much more familiar to what you're looking for. All right, so let's just go ahead and get started, guys. So this right here, this line here is Sunday, Monday. This is the start of the week right here. And so let's just get started with pound USD. And so we're looking at the Asian range here. This is again from 8 p.m. until 2 a.m. And as you can see here, right, we had a straight move that just happened automatically out, right? We came back and then we went back down again. Now, as you know, none of this here, this is nothing that's tradable, right? Because we're waiting for something like this, right? So remember, we're in the Asian box and then we're waiting for either a type 1 W, right, or an M outside of the box here. We're waiting for a type 2, which is right here, at the lower tops of the Asian box, right? And the other type 3 that we're looking for, that one would be something that happens in the middle of the range, right? So something like that, that would be type 3. So we need to, these are the setups that we're looking for. So if we don't get that setup, obviously we're not going to take the trade. So that leaves us with what? If we don't get that kind of a setup during London, then of course we have the New York session as a reversal, as a potential trade, right? So if for the members, if you've taken my course and you know that you're pretty much this is going to be your trade essentially if you don't find that setup, right? So here we go. Here is the New York session here is about to start, and of course we see price starting to reverse. Now our traders, they don't get in till we cross the catch up, and that would be our uh, our stop loss. Now, very important as well though is to see what kind of a what kind of risk reward are we getting out of this, right? Because essentially the goal is to try to make it, anywhere from 30 to 50 pips would be the ideal goal. But at the same time, we do want to have a good risk to reward ratio of at least 1.5 to more than likely 2 or more. So in this case here, if we're just going for, let's say, 30 pips or so, it's almost a 1-to-1. And then if we're going for 50 pips or so, we're looking at a 2-to-1, right? Regardless, we're looking at a reversal off of New York, right? So because we're looking for the reversal, since we did not have any setup during London that told us to get in, we know that typically we get a reversal during New York. So this is our opportunity to take a potential trade during New York. Now, um, as far as our entry goes, we try to aim for 30 or 50 pips and have at least a 1.5 or greater risk to reward ratio, or else we don't get in the trade. And then most importantly, we're looking to get after it crosses the catch up. Okay. So in this case, this would have been the trade here, and it would have caught maybe 34 pips or so. Because by the time we got to towards the end of the session here, like 1 and 2 o'clock, you can see it all starts to reconsolidate again. Okay, so that's one potential trade. Let's go to the next day. The next day here, we have our Asian box here, and then we have price again come all the way back down, right? Now, here's the thing. So, here's one thing you want to consider as well when you see this. What is this here? That's yesterday's low of the day, right? That right there is yesterday's low of the day. What are we doing here again? We're testing that low of the day. So not only are we testing it, but what are we getting here? Right? That, my friend, is your trade. That's a type 1 setup, right? We went outside of the box, right? Banks got all the suckers to actually sell, right? Came right back down to yesterday's low, and then came up, came back down, and boom, we took off. So that would be an unbelievable great trade that you could have taken. Okay, and that trade itself, if you would have gotten where we tell our traders to get, that would have been 100 pips in trade. Okay, so from 8:15 all the way until 12:30. All right, so that's one trade. That's really one good trade right there. All right, now let's take a look at the next day. So here we go with the next day of trading. And what do we see here? So here's our Asian range. And then right out of the Asian range, what do we get? We get a nice little move here. The first bar started within the Asian range. And then we have this. And here we have our test. And boom, we have our M, right? So one thing that you want to keep in mind is that once you get comfortable with this, you're going to be able to trade it both ways, right? So the main thing is just understanding the first way to trade it, and then you can actually go ahead and actually do it the other way as well, or trade it both ways. But for now, we have the first part of the M right here is actually happening. The first leg is happening inside of the Asian box, and then we come down, and then we have that push up, that fake out that gets everybody to go long, right? And then they literally, look what happened, they take it away from you, right? Now this may seem like a really small trade, right? But it's a setup that we're looking for. It's a pattern that we're looking for that's more important. Okay. And if once you see this, I mean, you'll get your 30 pips out of it, right? And so think about it like this. So if you get 30 pips, if you're able to get 30 pips like every day, right? Does it matter if you get 30 to 50 pips or 150 pips when each trade that you're taking is like, let's say, a 10 lot or a 20 lot? You know what I mean? So when you're consistently getting 30 to 50 pips and you can consistently do that, then all we're talking now is actually adding contracts to the trade. So instead of a standard lot on a 1.0, for 50 pips you're making what, 500 bucks? We'll take that up to what, 10 lots, and now you're making 5,000, you know? So that's what I'm talking about, the importance of just being consistent, of getting 30 to 50 pips, because once you master that, then that's really all you need. And as you can see, you can get this, literally like every day almost, you know. But anyway, so here's one setup here, right? That's one setup. Okay. Now, a second setup that you could have taken is this one here. And again, this is because we're going into what, the US session. So another setup would have been coming off of here, boom. There's your setup, there's your entry, that's your trade, right? And so that trade right there, you're looking at another 50 pips, right? So once you get consistent, you can trade it both ways, and you'll start to see M's and W's going back and forth. Okay. All right, guys. So let's move on to the next day here. So on this day here, what do we see? We have our Asian box here, right? And then we see price move out of that Asian range here down to here. And then we have a move back up to here. And then we see this candle here. We see this candle here push right back down, right? Now, it did not pass the low of that. Do you see that? You see I didn't pass the low of that? I'll remove this so you can see it. But you see that? So what does that essentially create right here is a W. There's your entry, there's your stop loss, and of course your take profit. So this would have been, 46 pips. Okay? So 46 pips, that would have been there. Now, this is what I'm talking about when you can trade it both ways once you get comfortable with it, is that during US session, what do we end up getting here? We end up getting a railroad track, right? Right at the high. You see that? Right at the high of Asian. So basically high of the day, we get railroad tracks. And that, my friend, is a cue for another trade setup, which is that right there. Railroad tracks give you another 44 pips. So railroad tracks at the high of the day, easy trade. Railroad tracks at the high of the day, easy trade. Okay. And you can see overall, this was just all moving in a range, right? Because it's setting up the bigger move for the next day. Okay. And we'll talk about that here in a second. But here's my point about this is that starting of the week, right? 1-2 days, right? We set up basically what we're doing for the next 2-3 days, right? 1-2 days. And then here we have Friday. And what are we setting up for? Look at this. Whenever you see a nice little tight Asian range, man, it's going to be a good one. So nice little 18 pip Asian range. It's going to be a nice trade setup. Okay. And sure enough, it didn't disappoint. You know, we have our move up, type 1 already, move down, move back up, and then a nice sun formation there. Okay. So let me remove all this to make sure that you can see it. So do you see that? There's an M in here, I promise you. There's an M in here. Okay. A move up, a move down, a move back up again, and the move straight down. Right? There's your M. That's a typical type 1 setup. That's a Brinks trade all day long. Okay. But in this particular trade here, I mean, it would have been so bank. I mean, a good 82 pips, you know, a good 82 pips. So, all right. So those were just trades. Think about this. Those were just trades in 1 week on one pair. On one pair. Okay. So one pair produced how many trades? You know, we had 1 here, 2 here, another 1 here, another 2 here actually. So 2, 4, 5, 6 really good trades on one pair in 1 week. So again, just think about that. One pair, 6 very good trades in 1 week on one pair. So